So if you just take either the ES or the NQ, and you look at each bar over the last it's 27 months of data now we have, and you calculate, okay, do you go for the NQ, do you go 30 ticks in one direction before you go 10 ticks in the other? And it's a the result is very consistent, right? For the ES, it's the same, except you're using 12 ticks and 4. And the answer is that half the time, it doesn't do either. And of the other half, or the remaining half, 25, half of the time, you want to get long. The other half you want to get short. So it's 50, 25, 25. 50% do nothing, 25% get long, 25% get short. And it's surprising how consistent that is across behaviors. Turns, pullbacks, even breakouts now that I've added over the weekend. Half the time, do nothing. The other, 25% of the time you want to get long, 25% of the time you want to get short. Except in the ES. The ES, it was on the breakouts were different. The breakouts showed a higher percentage of time where you want to do nothing. So instead of 50, 25, 25, it was more like 60, 20, 20. Not even that. It was higher than that, like 65, and then the other two are cut in half. I can get the exact numbers later, but it was interesting that on the ES, there's lots of cases where it breaks the level and then just thrashes sideways for a while, more so than the NASDAQ. Okay, so what we have here now is over the weekend, a lot of changes in the server that have been implemented and tested to make it quite a bit more easier to use. There's no restriction now on multiple symbols talking to the same server, nothing like that. There's new models in place that are, it's a deeper model for those of you that know machine learning. It has more layers. And then the breakout has been added. And then there's some new filtering in to try to deal with the volatility. All right, so let's see what today brings. The overnight range is 50 points, which is enough that normally, the normal conditions, I'd be careful. Lately, that's small, so I have no idea what to expect today. But the machine learning system will just do what it does based on the rules it's been given, and then I just get to sit here and watch. So the other thing I noticed in the testing is that with the current volatility, a lot of times our response to volatility is, if we're not just standing aside, it's that you double your stops and double your targets. What I saw very clearly in the testing for the new server and the new models is that you're better off cutting your size in half, but just keeping your stop the same. Because this happens here, where you end up just taking a lot more losses before you get that really nice trade, and that's what we're seeing here. So this 241 with the red arrow right there, that's a break short. This is a sweet trade I'd be in. Instead, I took just lots of these little losses, just enough because of the volatility that I'm done for the day now because of this, and I'm missing the nice trade. So I saw that repeatedly in testing. Is that if you have like a $10,000 account and you normally trade 2 contracts with a 10-tick stop in the NQ, that means you get 3 tries, just the way the risk management works out. If instead you just cut your size in half, so now you can try 6 times instead of 3. And the difference is huge. It's huge because the volatility is high enough that you just have to try more often to get in. So you basically need more money in order to trade the volatility, either by using a bigger stop or giving yourself more tries. All right. And so if you're still struggling with, if you're still trading with a small account, then you just have to deal with this. You can't escape it. because even with our fancy machine learning system here, we're not eliminating the randomness in the market, and the amount of randomness goes up as the volatility goes up. So something to keep in mind if you're normally trading, multiple contracts, just cut the size in half. All right, and that lets you try a bunch more times. And you can see right now, this trade here, this 241 breakout, this brand new behavior that we're now modeling. That one makes up for all the losses that I've taken up to this point. All right, the three or four little losses that I took. All right. Instead, I get to just sit here now and do nothing because this is using a $5,000 account as a model, which means $50 per trade, 3 trades, that's it. New code 151. So we just talked about the fact that one of the ways to deal with the volatility is cut your size in half so you can get more tries. Here's this day is a perfect example of that. I end up missing this nice short. All right, and then these shorts here look pretty nice. So I don't know if I would have taken them given the filtering I've got. But there's nice movement here. It is kind of odd the way the market's behaving. Look at this this ugliness here is you definitely want to be staying out of that. So the system's very clearly doing that, staying out of that. But another nice short right there. So again, this is the randomness factor goes up as the volatility goes up, and so you have to deal with that in some way, right? And so either double your stops and targets, or cut your size in half, keep your stop the same, keep your targets doubled. So I'm thinking about that. I may double the amount of money in this account so I can continue to. So I could basically, you get 6 tries instead of 3 because you're taking half the risk, right? So it's just a function of the math, right? As a trader, the most important thing we do is manage our risk. So if you're a $5,000 account taking 1% risk per trade, three trades per day is 3% or $150. If you have a $10,000 account, well, now it's $300. Okay, so you can do 2 contracts and take 3 losses, or you can do 1 contract and take 6. All right, or 1 contract and double your stop. All right, what I've seen is that the market's whippy enough that you're better off just keeping the stop tight and just do more tries as opposed to doubling your stop. You can see currently the way that we're staying out of the market when it goes sideways, that's working pretty well here. This is really ugly here in the NASDAQ on the right. The ES, I didn't get a chance to filter cleanly or test the filtering over the weekend with the new models. So the yellow circles represent trades that the system wanted to take but couldn't because of some filtering. So I need to go look at that. Clearly, that's a short we wanted right there. That fill is 35, 75, or 50 at worst, and goes to pretty straight move here all the way down to 23, 22 area. Then another short here that would have you'll take a 2-tick loss there, the way the trade management is set up. Same thing, there's a long here where you're going to take a 2-tick loss because you're hitting first target. Same thing there. All right, so we're at the end of the session here, and we talked about volatility in the live trading. What I did here was I wanted to show what would happen if I only took breakouts.
and the result is 18.75 points. So that's I don't know, just under. It's like 20 points is $400. So much better than taking a minus 130 loss. The other thing you can see here is in the new system, there's a lot of extra predictions being made that we then filter out and don't take. So I'm going to move that. We're going to make it a little bit more discrete, a little bit more discretionary. But I'm curious now. So what I did here was I said only do the breakout codes. All right. So these are there's long and short, break high, break low, and then there's success and fail for each one. So now I'm curious. What if I say I only want the breakout codes for when the breakout succeeds? So I don't want the failures. All right. So 141 is a successful breakout, and 241 means I think the breakout's going to fail. So let's take this one out. Okay. And then, whoops, not two. And then 251. Actually, I think I have that backwards. I have to go check my cheat sheet now. Hold on. Okay, here we go. So what we want is let's see. So this is the success column here. We want 141 and 241. In other words, I only want you to take breakouts that you predict will succeed. Don't do the failures in the current environment. It's too crazy. So let's see what that looks like. So 141 and 241 is what we want. So let's go back to here. 141 and 241. That's what we want. And then blank this one out. Okay, so now we're only taking two trades, a break high and a break low. You can see this entire list is empty. So now let's redo the replay. All right. So come back in 20 minutes. No, for you it's just a few seconds. For me it's a little bit longer. Hold on. All right. So here's the result. Only 241s and 141s, and it's less. That's the power of the tool, because I'd have bet good money that we would do better, only taking breaks that succeed in. But clearly there are predictions that the system makes that the break's going to fail where you do better. Amazing. So to summarize, we basically have four ways to go about dealing with the volatility. All right, stand aside is the what I would be doing as a human. Double your stops and targets, which would be the other human choice that I would make. Now, I think we can keep the stop the same, but cut your size in half and just give more tries, particularly on a day like today where you can see it's just really, there are times here where it's just really ugly. Really, this is very, very difficult to trade this. All right, or only take breaks. So there's basically, I've got two new options here I didn't have before, and I'm pretty pleased. We've been discussing in the room whether it's been good or bad that I just coincidentally I happened to launch this live in such a volatile environment. Clearly, this is the highest level of volatility I've ever seen, actually, for such a sustained period of time as well. And I think that the answer is it's fortunate, because we're getting a serious stress test and seeing some pretty ugly conditions. And if we can survive ugly conditions, then when things kind of go back to normal, I would expect to be able to do fairly well. So we'll see as we continue our progress here. The next thing that we're doing tomorrow is I'll be adding oil, since I've got the breakout behavior now, and I finished the oil models today, so that's coming tomorrow. We'll start simming that. And then the other thing I'm doing is, particularly because it's so volatile, I'm adding a little bit more discretion to the machine learning system. So we'll see quite a bit less predictions here, particularly when the market's ugly like this, going sideways. Okay, we'll see you tomorrow. Take care. Now, as I was signing off there, I realized we didn't cover one of the cases, which is cut your size in half and take more more shots at the basket, basically. So you can't do this if you have a $5,000 account, is a problem, because you can only risk $150 a day. 1% risk per trade, 3% risk per day. That's it. Period. But if you have a larger account, if you have 10K, and you normally trade 2 contracts, you could trade 1 and take 6 tries at the basket. All right. So what that looks like here is the max daily gain, the max loss is 245. So that if you hit 245, then you stop, because your maximum loss for the day is 300. So if you get up to here, you don't want to take another trade. That would put you over. Actually, this could be 255 is what I should have put here. I ran it at 245. You'll see the result in just a second. This is what we mean here. So you can get to 250, take one more trade, and then you would hit 300, which is that's 3% risk on a 10K account. The result is here. So I ran that replay before I started recording this. You can see all the trades here. The result is up here. So 32 points. This is the difference. All right, and this is very disheartening in many respects. If you've got a 5K account, you're a retail trader, you're a small account trader, and you're dealing with this volatility. And the options we covered were stand aside, double your stops and targets, not an option for you. Take breaks only, that's an option, so you could do that. This is not, but it's clearly the most profitable, as you can see, at least on this particular day. All right, which is okay. I'm gonna take more tries at the basket, but I have to cut my size in half to do that. You can't cut your size in half if you have a 5K account. All right, you just can't do it. If you break those risk rules, you're gonna regret it, because what will happen is you won't get a day where you make a nice profit. You'll get a day where you take a max loss, and now instead of losing your very controlled 3%, you've lost double that. All right, and that by itself tends to create all sorts of nasty negative feedback loops, and pretty soon you've blown out your account. So manage your risk. The problem with showing this here in replay is that you can convince yourself that, if I had just done that, I would be up all this money, and so next time you're going to do that. You don't get to do it if you can't afford the risk. Okay, you cannot break your risk rules. But not everyone has a 5K account. Some people have more, and this is a way to deal with the volatility. Okay, this is sort of the theme of today's video. All right, okay, I promise this is it. Final sign off, and then we will see what tomorrow brings.